Granny's give me goals, balls.
1K vibes, family. Right back at you with another video, right? So the topic of today is we're gonna be talking about the importance of risk management, right? So everybody wants to know, bro, how can I make money in the Forex market, bro? How can I make more money and make sure that I'm not really losing a lot of money, right? This is very important, right? This is a very important topic when talking about how you can make money in the Forex market, right? And to make sure that you're not really losing a lot of money, right? It's all about risk management, right? Risk management, right? So in terms of risk management, of how to determine how you can make more money than you lose in the Forex market, it's all about risk to reward, right? So in terms of risk to reward, right? So it's pretty much self-explanatory, right? So let's say you go to the candy store, right? And you got $1, right? You got $1. You go in the candy store and you buy let's say you buy 2 canned sodas for $1, right? But your friends wanted something to drink, right? And you just came from the store and they didn't go, so they thirsty. You're like, bro, I'll sell you my 2 sodas, right, for $1 a piece. Right now, you just turn $1 into $2. That's the basis of risk to reward, right? Always making sure that whenever you risk $1, you always get 2 back. You always want a 1 to 2 when it comes to risk to reward, right? You want to risk as little as possible and double what you're risking, always, right? So in the Forex market, right, if I'm risking $1, right, I always want to double it and make $2 every time I'm risking $1, right? Or if I'm risking $10, right, I always want to double it and make $20 every time I'm risking $10, right? So we have certain tools that we use, right? So let's say from our other video, right, when I taught you about the M's and W's in the market, right? So we had a W formation right here, right? I would have took a buy at this particular level, right? I actually took this trade today, and I caught about 40 pips, right? And I put my stop at break even. So for those that don't know what I was just saying, right? So pips, right? Pips is basically how we calculate our money. It's point and percentage, right? That is a pip, a point and percentage, right? So in terms of pips, right? So each point that the market goes up, we making money. So we went up 40 pips today. I caught 40 pips today, right? So that means if I was risking $1, I caught $40, right? If I was risking $10, I caught $400, right? So we buying off of a W, right? We know M's and W's. W's you buy at the lowest point, right? M's you sell at the highest point. So we got a W, right? I want to buy, right? I want to buy off of this second leg right here, right? And we have certain tools that we use. So in terms of the Forex market, when you're going long, that means you're buying something, right? When you're going short, that means you're selling. So let's say we got a risk to reward right here, right? I'm gonna tell you guys what this means, right, as well. So right here, as long as this says 2, I'm taking a trade every single time. As long as it says 2, I'm taking a trade every single time, right? So I would have entered right there. And I would move my stop loss to right here. Look at this. It says 3. And if I caught this whole move, right, that's a 1 to 7. If I catch this whole move, that is a 1 to 7, right? Risk to reward, right? I said you always want to have a 1 to 2 risk to reward. But if you can catch a 1 to 3 or a 1 to 4, right? Like right here is a 1 to 4 risk to reward, right? It's basically how it works. Anytime you risk $1 or something, or 10 cents or something, you want to double it, right? You always want to get double the reward. You don't want to risk $1 and get $1 back. That's crazy, right? So this is the importance of risk to reward, right? With this particular tool, right, the long position tool, it helps me to line it up, right? It gives me a stop loss and a take profit, right? So let's actually go ahead and move these over, right? And let's make these smaller, all right? And we're going to talk about stop loss versus take profit, right? So stop loss versus take profit. So your stop loss is your support in a trade, right? It's your safety net. It's what's going to protect you in a trade if it's not going your way. So let's say you're losing $5 in the trade and you got a stop loss of 10 pips. If you lose $10 in that trade, it's going to take you out, right? That's what the stop loss is there for, to stop you from losing any more money, right? And your take profit, right? Take profit is in the pudding, right? That's where you take profit in the trade, right? It's your targeted goal, right, for the day. So I told you I caught 40 pips on a trade today, right? So let's calculate that. I caught 40 pips on a trade today. On this trade, the US dollar versus the Mexican peso, right? Caught that today. We caught a buy, and I caught 40 pips. So let's go from this position. Let's go 40 pips. Right here, about right here. All right, so I caught. Let's get this back. All right. And bring this down to like right here, right? Now we always want a 1 to 2. I had a 1 to 2, right? So we had this. I caught this particular move here, right? I stayed in this trade. I caught me 40 pips. I bagged it, right? I went to break even, right? So basically, break even is where you put your trade at where you entered, right? You put your trade at your entry price. Whenever you put a trade at break even, that means you no longer looking at that trade, right? You letting that trade do what it want to do, right? You already made your bread. You took out your profit, and you letting that trade ride to hit your take profit for the day, right? So that's the importance of it, right? This is how you make more money in the market versus losing money in the market, right? It's all about risk management, knowing how much money you're risking, whether if you're going to risk 10 cents, right? Or you're going to risk $1, or you're going to risk $10, right? Me personally, right? I like to risk $1 to make $10 every time the market's going my way in terms of 10 points, right? So let's say if I'm risking $10, I want to make $20 on that trade, right? Because that's the risk to reward versus a 1 to 2, right? And pips is points and percentage, right? So if I get 20 pips and I'm risking 10 pips, I just made $20 from risking $10, right? I got my stop loss. What? That's what's supporting me in a trade, is my safety net. If I'm losing money, it's going to take me out, right? And we got our take profit. Is what we taking profit in the trade. That's the targeted goal for the day, right? So I literally just broke down how you can be more profitable in the market, how to make more money than you lose. It's all about risk to reward, risk management, right? So if you like this video, like, comment, subscribe, repost, share it to a friend that may be a trader or want to get into trading, right? I'm giving y'all the free sauce, the free nuggets. If you want to know more, I'm going to drop my Instagram handle, my Gmail, and my personal mentorship contact to me, right? So you guys enjoyed this video, turn on your post notifications, subscribe to the Saucy 1K Vibes channel, and we out.